fix me a drink.
Hope everyone's doing well and welcome back to another weekly outlook. So cool. I was quite happy to be making this one. I think the bias is finally getting very solid. You know, it's not been a bad year by any means to start off, right? But there's definitely been a few small periods of very bad price action, essentially just a lack of a very clear weekly or daily candle and whatnot. Now I believe, we have a clearer target, which we'll talk about in a second. And further to that, I hope I don't jinx it. First of all, I'm making this on the Saturday in the evening, but this video will be going up on the Sunday. So in that time span, or even after the week, I'm just hoping Trump doesn't come out and say X, Y, and Z, or somebody else that has a massive impact on the market. It's quite a common theme we've been seeing on the weekends recently. Even with our weekly outlooks, where we have the outlook, somebody comes out, and now because they've said a very specific thing, it's easy to determine, okay, the DXY is probably going to open up this way with a gap and blah blah blah, whatever, right? So hopefully that doesn't happen this time. If it does, I'll attach a comment or edit the description of the video, right? So cool. So coming off of last week where we had a couple high impact news drivers, we had CPI, PPI. When we look at this week to start off, we have bank holiday on the Monday, right? Expecting that to be a slower day, which is actually very perfect. We'll talk about why in a second. Come on to our Tuesday, we have Trump speaking. This means I believe they're just unsure exactly when it will be, but it's going to be in the evening time for the guys in the UK. We've got this is actually a high impact news driver for the GBP, something to bear in mind right at the start of London session. And then of course CPI for the GBP on the Wednesday, FOMC meeting minutes for the US dollar, unemployment claims to watch out for on the Thursday, and then a bunch of scattered news folders on the Friday. So of course this is one of those news events that happens every few weeks, or I believe it's once a month, with the flash manufacturing PMI. Usually the advice is don't trade that London session. You have a news event right at the start, an hour in, 15 minutes later, half an hour later, half an hour later. It's like a minefield. It's very hard to navigate. Even if your bias is right, it may sweep both sides several times before going in the intended direction. So trying to trade in that zone usually is quite difficult, especially on a lower time frame. However, right, bit easier for the New York kill zone guys, or London close kill zone. You have the news event late in the session to watch out for. So cool, let's get into it. Let's see. First of all, okay, monthly time frame, where are we in the month? We're about bang on halfway in the month, right? Very obvious, I'd say. I know we've taken the previous monthly low, but I think it's very obvious we've taken, or rather placed, the high of the month in. This is clearly a monthly swing point. So now it becomes a question of, clearly this is a type of reversal, right? Is this the reversal or is this a retracement, right? I'll make it very simple for you guys. I know everyone's going to be concerned of saying, oh, is this A, M, D? It might be, right? Or is this manipulation where price has gone up and we're going to retrace and go up one more time, right? Which one? Either scenario, right? Either way, we are going to draw to something obvious, which is this monthly fair value gap. So essentially what that means, for the time being, to put it very simply, all we want to see is price move towards this. When we reach this, then we will reconsider. We'll reevaluate how is that new monthly candle opening, how is that new weekly blah blah, but whatever it is, right? But for the time being, I would argue we have a very obvious target. Come on a weekly time frame, very similar. I believe we have a swing point in place. We left the previous monthly high. We'll get rid of this marking. Built this nice swing point, prices moved away, expanded away, making a bearish order block. And now, of course, we're in the expansion phase. I would anticipate this expansion to continue and head towards this sell side target leading into the monthly fair value gap. Right, simple. Now, on a daily time frame, why is it good that Monday is a bank holiday, right? Why did I mention that? Because, right, of course, obviously, a lot of you guys are going to be looking at this daily fair value gap. You know, good, right? If you are looking at this, or if your eyes already went to this, great. This is the area to watch. This is where I would anticipate the higher the week gets placed in, right? But very simply, if Monday is an accumulative day, right, or even just trades into this, is fine. Because what we want to see is price push into this. If the Monday accumulates, it will be a version of AMD, right? If the Monday is an accumulative day, right, imagine even if it pushes up, but it doesn't move a lot, it will essentially be a form of, accumulation. Tuesday comes, sweeps that, and then moves away. That's essentially placing the higher of the week, right? So if we were on a lower time frame, let's go to a 1 hour, for example, what that might look like is a bit hard to draw on the map thing. But essentially, price just accumulates its way up here. Now we're up here. The next day starts, right? You get that move to take the previous daily high, sweeping a bit of internal liquidity. You're in the daily fair value gap, displacement down, and that's your, that's your weekly, essentially your weekly profile. That is the sort of thing that we're looking for. It's a logical assumption to make that Monday can be accumulative or move less because it is a bank holiday, right? So therefore, simply put, still focus on this. But essentially, if the Monday comes and taps this very slightly and, maybe even starts to move away, just be careful, right? Consider that the Tuesday can still come and sweep Monday's previous daily high, dig into this a little more, and then continue, right? That is the sort of scenario we are looking at. If the high of the week can get placed here, makes it very easy. You start off by targeting previous weekly low. So imagine how the week is placed. You've got the, displacement away. Now you're thinking, what should I target? Start off by targeting the previous daily low, which will be wherever it is, and then the previous weekly low, which will be this target, and then past that, we're just looking for further expansion, right? Come on to our US 10-year. I like this. We actually spoke about this scenario. I was a bit doubtful, I'll be honest, right? I know I said to you guys, I want to see all of this sweat, respect this high, and then trade lower. And we are actually getting that scenario. Why was I doubtful? When I started seeing these candles print up and, respect this previous monthly low, I got a bit concerned thinking, maybe we're offside. Maybe your price is going to trade high here, especially with the, the tariff fundamentals. Now, us trading here, taking this buy side and displacing down makes me a bit more confident that we are going to head for these equal lows. If we head for these equal lows, we push lower, it's going to be the second leg of bearish price action on the bond yields, right? Essentially, matching up with the DXY, finally, right? We spoke about this low resistance liquidity run when they both move in the same direction. We've taken a good bit of buy side, nice wick that can be a swing point, started moving away. And now I would anticipate, right, especially looking at this monthly candle, for the candle to expand this way more. So when, price potentially starts getting to this monthly order block is when the DXY might reach that monthly fair value gap. And that will be a sort of deciding point to see, are we going to trade through this area or are we going to respect this? And again, we'll see how it is, what we expect once we finally get there. Right, cool. And especially, right, just, adding emphasis to weekly close like this, sweeping the last couple candles, massive wick. I would bet on the next candle trading lower, especially with this being equal lows on the daily time frame. Now, Euro GBP has not been very nice to us, if I'm being honest. We're stuck in this consolidation. There is no clear bias. However, as we said, this week, we have a lot of news events coming up specifically for the pound to begin with. And then, of course, towards the end of the week, Euro and the pound, right? Now, of course, this pair consolidating is not the end of the world. It's not actually bad for us either. It means the DXY is trending, right? That's what you tend to see. So all I would say is when you are trading intraday, when you trade how we trade, just be careful. If this is a accumulation and price is now coming to the premium and hitting some sort of high time frame PDO rate, for example, price hits this order block and displaces away, right? Or price even sweeps this liquidity and displaces lower. then of course you have the bias that your GP is probably bearish until the discount of this consolidation, right? So that's how I view it. Similarly here, we've taken some internal liquidity, taken some sell side, right? We have that sweep and now you have a bit of a kick up. I would bet that price moves this way before we even think about coming back down. Where it moves up to is, you're gonna have to see where you are in the session. Is it hitting the order block and starting to respect it? If it's not, then of course take the liquidity. You have to judge it level by level, right? So essentially patient, but during your sessions, always keep an eye on it, see where it is, see what it's, recently swept or taken or hit into, and where's the displacement coming from. Cool. Bitcoin. Now, again, nothing very interesting, literally nothing since that midweek outlook. Daily time frame is disgusting. It's like a barcode, especially here. But price is coiling up, meaning, you're forming this very tight wedge or range. At some point, you're going to get a breakout. Exactly when, it's hard to say, right? But, whichever way price is going, I would expect to see AMD here. As you guys know, right, we spoke about AMD on the higher time frame, like, oh, this is one big consolidation, manipulation, either way, distribution. But, same principle on the lower time frame here. You have a tight wedge, liquidity on both sides. Price quickly spikes this way, and starts coming down, then it's likely you're heading to the bottom side. And vice versa, if price spikes this way, then moves back in, it's likely you're going to head back to this high. Essentially, that same idea that we just mentioned in Euro GBP, all the markets are the same, right? In that sense, they're fractal. We're in the discounted consolidation. If you sweep this sell side, push up, it's likely to make a move to a premium. And until price is ready to break out on a bigger time frame and a higher scale, you're just going to be stuck in this large consolidation. Cool. S&P not as bad, right? Finally, that was a horrible week, all of the week, apart from towards the end. Finally started moving back to the all-time high. Coming on a weekly time frame, what we are seeing is prices, of course, this is called a propulsion order block, right? So this was the order block, bullish. Price has now made a new order block, tapping into this and moving away. So the following week, right, especially coming from a big wick like this, I would have expected this week to move this way anyways, which it has. But the following week, I would expect a continuation of this. I'm not expecting this previous weekly low or anything like that to get swept. I would expect this range to be respected, and from here, price to push higher for the time being, right? So I would focus on this daily fair value gap, right, Thursday's candle, to be an early low of the week, and then look for that expansion towards the buy side, right? Pretty simple. Like I said, guys, markets are shaping up. Hopefully we're going to be able to capitalize, and the intraday price action is also going to be good. But yeah, just keep it simple. Wait for that displacement. Use all those things, right? Use that, weekly opening price. See its price manipulating above, below, whichever way you need it to. Has it displaced back through? Are you confident, right? You made the swing point, i.e. the high or the low of the week on any given pair or chart. And, is there a way for you to get in line with that expansion? Do you have targets to get in line towards? Right, just all step by step, keep it mechanical, keep it simple, but I think it is looking easy and nice, and hopefully that does not change. As usual, any questions or help, please just drop me a message.